This question comes up all the time. Should I invest in real estate or just buy Bitcoin? What's the better financial decision? In this video, I'm going to walk you through the numbers and show you why just buying and holding Bitcoin is probably a better investment than investing in real estate. Real estate is crashing in price relative to Bitcoin, and that trend looks like it's going to continue.
Yeah, so I first bought my single family home for 100 Bitcoin, which today, I'm alive on the outside, but I'm dead on the inside because I'd be lucky to get 10 Bitcoin today for that same home. So real estate is crashing against Bitcoin. Real estate is being demonetized against Bitcoin. And that's simply because Bitcoin is a better collateral.
In this episode, we get into the first of its kind product coming to the real estate industry, the self-repaying loan with Bitcoin. And I show you exactly why Bitcoin is probably the better investment using a real model with real data. It's a deeper dive episode and a longer one, but a really good one. This is Dante Cook with Bitcoin Simply. Let's get into it. In 1971, the price of everything was distorted, and that was when the United States moved off of the gold standard. And since then, stable markets have been replaced with huge boom and bust cycles. Let's look at how this has impacted real estate. If you look at this chart here, from 1890 to 1971, the rates to buy homes in this country were relatively stable. But everything changed in 1971. And this drives the craziness that we are seeing and experiencing in our market today. In our current market, mortgage demand is at 30-year lows. This is one of the most unaffordable markets in U.S. history. 82% of homeowners say it's a bad time to buy a house, which is the worst sentiment ever. People are probably so pessimistic because in June of 2024, this year, the total value of the residential real estate market globally hit $50 trillion, which is up from less than 10 at 2000. This has caused the annual income needed to buy a home to be $109,000 in the United States. And that's assuming that you want to spend 30% of your budget on your house alone. Housing has become a wealth vault for the rich. Listen to what Michael Saylor has to say about this.
I know wealthy people, they own 16 estates on the Eastern Shore, and they live in 2 of them. Like, why do they buy them? They land banking. What does that mean? Well, the guy makes a lot of money every year, and he doesn't want to put it in a savings account, so he goes and he just buys a cool piece of property, and he buys another one. Well, okay, it sounds good, but here's the problem. The guy buys up the beautiful pieces of property, and so you can't afford it.
Right.
And if the rich guy wasn't buying up all the beautiful houses, they would cost half as much. And you could live in a beautiful house. So here's what happens. Some rich dude has 27 houses that are empty. You don't have a beautiful house. You have a family. Your kids, your dog could use the beautiful house. The rich dude doesn't even want the house. He just wants a long-term capital preservation strategy. Right? And so that's a perverse incentive and a distorted economy. That's broken. That's broken money. That's because the rich dude is using an estate on the Eastern Shore of Maryland as a piggy bank.
Yep.
Huh? But the estate doesn't get renovated. The house is falling down. There's a beautiful pool on the water, and you could have a great family picnic there every Sunday, but it's not going to happen because the rich dude has 16 other houses. He just bought that house because he thought it was a good investment. Okay, that's wrong.
But when you measure the cost of owning a home in Bitcoin, the price of the home is going down. Let's dive into this custom model that I built to show you the numbers yourself. Don't trust, verify. Okay, so I wanted to walk through this calculator that I've created that would allow us to evaluate whether we should buy Bitcoin versus investing in real estate. And the numbers say that we should probably just buy Bitcoin. So if we were to make a $100,000 investment into Bitcoin and hold it for 21 years, and let's just say that we'll have Michael Saylor's return of 29% a year in his long-term models. And other things we can look at is what would be the capital gains impact if we sold the property at the end of the investment period, or if we invested the annual cost and property maintenance back into Bitcoin. I'm going to go ahead and do that because that gives it an apples to apples comparison. So if we were to buy a $500,000 home that we expected to appreciate at 5% a year, roughly the rate of money expansion, let's go 6%, let's be a little bit more generous, down payment of 20%, mortgage interest of 6.5%, and a 30-year loan. Let's say that we even plan to rent this house. Let's talk about the monetary premium aspect of it, where we would rent this house for $2,500 per month. The vacancy rate would be 5%. Let's say it cost would be 8%, even though that's generous. The CPI print showed that inflation was going back up. If we had an annual property tax of $2,500, which would be light, that would be 0.5%, which is pretty low. Again, we're being generous towards real estate here. No annual utility costs. Let's assume that your renters own that. Or maybe, let's just say that you have, let's say, $4,000 in costs. You expect your rental growth or that rate of growth to go up 3% a year, and you're paying a property manager to manage it. Well, when we're looking at this time frame, the amount that you would make in real estate would be $2 million, and the amount that you would make in Bitcoin would be $93 million over this time frame, just with a $100,000 investment. Maybe let's decrease the time to make it apples to apples, or a little bit lower, try to give it a little bit more in the favor of real estate. But over that investment period, in that time frame, your real estate investment will return $1.1 million, and your Bitcoin investment would return $6,293,000. So you can look at things like your monthly net income revenue, conservatively on the high end, what you could get there, your annual cash flows, your operating expenses, your down payment, how this is impacted by the amortization of the loan. But remember, we're not holding it for the entire time period. But when you're looking at it this way, the value of Bitcoin, the longer you hold it, continues to go up and give you a greater return over time. So here's an example of why just buying and holding Bitcoin, even at a lesser amount of 100,000, is actually going to create and produce a better return than just buying and holding real estate over the long term.
Over time, Bitcoin is going to continue to eat into the monetary premium in real estate. What is monetary premium? Well, that's the cost of the home that is above its utility value. I asked CJ Constantinos from People's Reserve how mortgages actually work and why he believes that Bitcoin is a better form of collateral.
Yeah, so I first bought my single family home for 100 Bitcoin, which today, I'm alive on the outside, but I'm dead on the inside because I'd be lucky to get 10 Bitcoin today for that same home. So real estate is crashing against Bitcoin. Real estate is being demonetized against Bitcoin. And that's simply because Bitcoin is a better collateral. Now, when you get a mortgage, what happens is the person who writes that mortgage, the underwriter, they put a lien against your home. So it's not really that the mortgage is based off of your promise and your credit score. That's part of the equation. But the bigger part of the equation is that the home itself is actually acting as a securitization of the loan, as a collateral, so that if you default on the loan, the underwriter to that loan can possess the property and then sell it into the marketplace to recover some of the funds that they lent you. So that collateralization process has really led to a monetization of the asset class, as well as other tools that allow you, like a home equity line of credit, the HELOC, whatever you want to call it. You can tap into that equity and pay interest to access that wealth. Well, these financial tools built around real estate has what really led to the monetization of real estate. But what we're seeing now is a better collateral enter the scene, and that's Bitcoin. And Bitcoin is the most pristine collateral for all the reasons that you mentioned to your viewers on almost a daily basis in your newsreels. It's hard, it's cheap and easy to settle, and it's secure. It takes the best of gold and the best of treasuries. Gold was hard, but you couldn't secure it and you couldn't transport it for cheap. Sometimes it would cost more to settle the debt by transporting and securing the gold than it would in the interest to borrow against it. So what happened? We created a solution, U.S. Treasuries as pristine collateral. And that solved the problem, because U.S. Treasuries, you just type it on a Web 2 ledger. No problem. It's cheap and easy to settle. But it created a new problem. There's no limit. You can create an infinite amount of it. So it lost the hardness of the gold. Here comes Bitcoin onto the scene. You get the best of both worlds. You get the hardness of the gold, but you also get the easy, cheap, secure settlement of the treasury. It's the natural evolution and progress of now an engineered money being the best and most perfect, pristine form of collateral.
One of the craziest things about home ownership is that sometimes you actually have to prove that the home is actually yours, even if you originally signed the title and the deed. Bitcoin fixes this. I asked CJ about some of the crazy things he's seen in his time regarding fraud in homes.
Dante, you're very astute, and it's amazing what you said there about some of the fraud that's taking place with home ownership records and with the government's maintenance of these records. Because one thing that we do at People's Reserve, beyond just writing the self-repaying mortgage, is we have a home security product. And what we do is we ensure that those government records are maintained properly. In our beta, we actually came across one of our testers who found out that the name on the deed that the government recorded did not match his name. He was able to then go to the government and get it fixed. And he said, thank God I did that before I tried to sell the property or before someone noticed and tried to make a change without his authority. So by taking ownership documents and what we call a proof of ownership process, and then tying that data to the Bitcoin blockchain where it can be secured and not manipulated after it's been notarized through real world confirmation, is something that the marketplace does not see coming for real estate. So this is beyond just financial products. It's also about the security of ownership and the ability to prove ownership without dependency on a centralized entity such as the government. So that's a really interesting aspect that I really haven't talked about much that People's Reserve does. I usually just focus on the financial products, but yeah, security and proof of ownership are a really important piece of real estate ownership, because you can't just depend on a single government entity to properly record these things. And we had a small beta. So, maybe we have like 40 testers, and this happened to 1 out of 40 testers in one state. So I don't know how the statistics line up, but if it's happening out of 1 out of 40 people in our home state here of Florida, God only knows how much mistakes there's been made across the country because of the size of the marketplace and the practices of the government to record these things. But securing ownership and proof of ownership is part of real estate ownership, and People's Reserve couldn't be more happy to help people with that.
One of the ways that you can secure your property rights is by leveraging all of the tools and benefits that holding real Bitcoin actually has. And that comes when you remove it from exchanges, and that's why the Bitcoin Way exists. Members of their team will walk you through proper 100% self-custody, step by step, so you can remove all of the counterparty risk, stop sharing keys with third parties, and ensure you protect your generational wealth the right way. Go to thebitcoinway.com and schedule a 30-minute meeting with their team. This is all very interesting, but one of the craziest things that people aren't even factoring in is what happens when you integrate Bitcoin into the debt products to buy homes themselves. I asked CJ about this future and what exactly a self-repaying loan is.
And we integrate it into debt products like a mortgage. A whole new world is opening up, because now it's no longer just the home that is securing the loan. It's also the additional posted Bitcoin collateral. And here at People's Reserve, when you post Bitcoin collateral, it works the same as it would in a regular mortgage, but it's actually a self-repaying mortgage. And we'll get into that, why we call it that. But what happens as the lender, we are happy to write that loan to you and keep it on our book. If a bank writes a loan to you, they package it together with other mortgages and sell it off to the suckers, really. And because they don't want the risk on their book, the real rate of return on that note is negative. Plus, the risk is way too high. The process of foreclosure and liquidation can sometimes take years, and oftentimes doesn't end up actually covering the principal and penalties of the loan, especially in a marketplace like we have now with high interest rates, where the real estate market is kind of stagnant. The volume on home sales is almost at all-time lows. So that dynamic makes mortgages even riskier. But when you integrate Bitcoin into this mortgage product and someone defaults on the mortgage, what happens is the Bitcoin collateral is liquidated to cover the principal plus penalties, and the lien is released. So usually when you hear the word liquidated, you're like, I lost. But if you take out a Bitcoin self-repaying mortgage and for some reason you default on your mortgage, you'll get a phone call that says, you've defaulted on your mortgage, your Bitcoin's been liquidated, but congratulations, you now own your home free and clear.
This is sort of mind-blowing when you think about it. I wanted to learn a little bit more, so I asked him about the mechanics and the downsides of this potential thing, as well as the upsides.
$100,000. If you take out $100,000 loan, you guys want the borrower to post $130,000 in Bitcoin collateral or $120,000 in Bitcoin collateral. Is that sort of how it works?
Yeah, so this is a really exciting aspect. So let's start with the downside risk first, so that we can understand and better measure the upside reward. So the downside risk is that to open a self-repaying mortgage, you need to post at least 1-to-1. So if you're going to borrow $500,000, you need to post at least $500,000 worth of Bitcoin. Now, what happens if the price of Bitcoin starts to go down? This is what's so amazing about this product, because we're not in the business of liquidating you to steal your Bitcoin on a fire sale. We don't want to do that. We built these products for Bitcoiners who want to be empowered by their responsible saving of the most pristine form of collateral in the world. Well, how do we do that? We make sure that liquidation is only a result of default. Now, if the value of your collateral goes from, say, 500,000 down to 300,000, then what happens is your loan to value ratio will change. And based on your loan to value ratio, there will be different thresholds in your contract. And as that ratio increases, your interest rate will actually increase, right? Because if you have $500,000 of Bitcoin backing a $500,000 loan, that's risk-free. But if you have $300,000 of Bitcoin backing a $500,000 loan, now we're back to the point where, yes, we have to sell the Bitcoin, but we also have to foreclose. So it increases risk substantially. So what happens when risk is increased? Well, free market interest rates tell us that when risk increase, the interest rate goes up. So if the Bitcoin price goes down, your interest rate goes up. Or you could post more Bitcoin collateral in order to maintain that LTV contractual range. And if you stay within that threshold, then your interest rate will stay the same. So that's the downside risk of posting the Bitcoin collateral. Only a default will lead to a liquidation. Otherwise, you could see your interest rate increase and vice versa. So now that we know the risk, what's the reward? And this is why we call it self-repaying. This is what's so exciting about this product, because we know Bitcoin is engineered money. It was strategically designed to leverage the natural laws of economics and price discovery to empower its holder, its savings technology. And when you implement this savings technology and it does what it was designed to do for you, on the upside, if you have 500,000 of Bitcoin and now it's worth 750 or now it's worth $1 million, your LTV is going to decrease significantly. So as you move that threshold down, we can actually lower your interest rate even further, which of course changes your monthly payment and saves you interest costs over the life of the loan. Now, if Bitcoin really starts to shoot up, let's say that the strategic Bitcoin reserve goes live and Bitcoin shoots from from 100,000 to $1 million, and now you have a significant amount of collateral, you have a few different options. The first thing you can do is you can select from a custom range of 0 to 100% of your mortgage payment to be taken from your collateral. So what we can do is we can help you increase your quality of life and standard of living by allowing you to no longer be forced to take a large portion of your cash flow and allocating it to your mortgage payment. You can simply go into your settings and choose exactly what percentage you want, from 0 to 100%, and we will sell a small portion of your Bitcoin collateral in order to cover your monthly mortgage payment. It's a great way to dollar cost average out if you're not trying to time the market, but you want to benefit from a big positive move. The other thing is if you get that big positive move, you can just choose to liquidate a portion of the Bitcoin and close the loan entirely. And you can do that without penalty and save, depending on how much money you borrow, hundreds of thousands of dollars of interest over the life of the loan.
If you want to learn more about the People's Reserve and the work that CJ is doing, follow CJ at CJ Constantinos on Twitter or the People's Reserve. Over the long term, real estate will continue to fall to its utility value. It will no longer be looked at and viewed as the investment that it has become since 1971. Bitcoin will become the more attractive asset. I believe that Bitcoin will continue to demonetize real estate, not just because Bitcoin is a better vehicle, but because it's one of the first things that gives people, everyone, the opportunity to have property rights. Most people can't afford to buy a home unless they're a member of the Trump family. Well, even now people in the Trump family, like Eric Trump, believe that this is why Bitcoin is the revolution and is the next biggest thing that's going to happen in terms of property rights in America and globally.
To people, and this is no disrespect, they can't go out and build a 70, 80-story building on Fifth Avenue in New York. The entry costs are too high. 100%. Not to mention, they'll never find the piece of land, they'll never get it entitled, they'll never get it permitted. But they can put into an asset that historically has actually, over the last number of years, has had significant levels of return higher than most real estate. And that's a beautiful thing. And you take people in developing countries and developing nations, people who otherwise don't have a chance, and crypto actually gives them a chance to invest, a chance to succeed, a chance to maybe get lucky and transform their lives. And that's a beautiful thing. And I think it's going to be, listen, it's the future. Make no mistake, it's the future. And again, I really believe that the people who embrace it earlier are going to succeed. The people who don't will, as I said before, get left behind.
Bitcoin represents hope and wealth preservation. And moving forward, it's a better store of value than real estate. So, would you invest in Bitcoin over real estate? Why or why not? Let us know in the comments. Before we end this episode, I wanted to let you know about the Bitcoin event of the year happening in April of 2025 at the BitBlockBoom Conference in Dallas, Texas. From April 3rd through April 6th, Bitcoiners from all around the world will be coming to hear from their greatest speakers. Speakers like Marty Bent, Parker Lewis, Guy Swan, Bob Burnett, Gary Leland, and others like me. Your ticket is all-inclusive and will give you free access to educational workshops and exclusive events where you can meet your favorite Bitcoiners that you see on TV and podcasts in real life. You can get $100 off of your ticket by going to bitblockboom.com and typing in the promo code BBB25. Go to bitblockboom.com and type in the promo code BBB25. This is Dante Cook with Bitcoin Simply. Happy stacking.